the mortgage industry in general?
Really tricky to get financing.
You've got all these new incentives from the government.
Some lenders are giving cashback incentives.
This is a time to get a mortgage before things go crazy.
The first thing we want to do is get you pre-approved.
How are they helping them get into their dream home?
If they're looking to purchase a home, they only have to put down a minimum.
Now have a champion behind them.
They're not declaring everything.
Hi folks, welcome to the Mortgage Den. Today is February 7th, 2025, and with me today is Natalie Araujo from Northwood Mortgage. Welcome, Natalie.
Thank you for having me, Nick.
Today we're going to talk about the mortgage industry in general, right? And what's happening and where we just came from. Natalie, let's go back a little bit in time. Let's talk about, the approving policies that existed prior to October of last year. So what was different back then?
Well, a lot of things were different, but mostly it was difficult to get a mortgage last year between high interest rates and properties that had really declined in value. It was really tricky to get financing for a lot of clients.
Now, on the insured side, this is where people have to qualify for the default insured mortgages. What was the amortization that they had to qualify under?
It was 25 years for insured or insurable mortgages, and properties had to be under $1 million.
Let's move forward to today. There's some new rules from the government. How has that changed the playing field for, let's start with the first-time home buyers?
So there are some new incentives that have come down the pipe. One of them being for insured mortgages, we can now do purchases that are $1.5 million, so $1.5 million. Still, putting less than 20% down payment. Another incentive is also to extend the amortization from 25 to 30 years. That's great because that will reduce the mortgage payment for many borrowers, and also they'll be able to qualify for more. So that's also really good.
Now, for people who are buying homes from new builds, from builders, what's the new rules on that one?
So yeah, that's another great incentive. So now any new construction amortization is 30 years. So again, that will allow a lot of, first-time home buyers to get into the market because now the amortization is being extended to 30 years.
Now, on the investing side, what new rules came out from the government which allow people to have money for a down payment?
With regards to down payment, if clients have RSPs, they can tap into that. Previously it was a maximum of $35,000. Now they've increased that to $60,000. So that's really good. Also, they've brought in the first home savings account, FHSA, and that has a lifetime contribution of $40,000, and it has all of the benefits of the RSP. But the best benefit is you don't have to pay it back. So that's another investing tool for first-time home buyers. Now,
the government obviously came out with these new rules to help the real estate market, to help the buyers buy at this point in time. These new rules advantage the first-time home buyers versus, a regular buyer who is not a first-time home buyer?
Yeah, definitely. This is going to help first-time home buyers. That's really where I think these policies are really driving to that segment of the market.
You've got all these new incentives from the government, which is going to help people qualify for more of a mortgage and for a larger purchase. What are the lenders doing to incentivize them to use their products?
So we're seeing many lenders with rate sales. So there's definitely, we're seeing with different types of banks and lenders, there are definitely, a lot of movement there. The other thing we're seeing too is some lenders are giving cashback incentives, and some lenders are also helping out with appraisals. So, clients don't have to pay for a full appraisal.
So Natalie, I'm looking for a mortgage, whether I'm a first-time home buyer or a repeat buyer. What advice do you have for me?
The first thing you want to do is work with a mortgage broker. When you walk into the bank, you are just dealing with someone at the teller, someone who is not very experienced necessarily and only has one product to offer. When you're coming to a mortgage broker, we have access to many different lenders, many different products, and we're able to, let you know what you qualify for and what's the best option for you. So that would be the first thing that I would recommend.
So Natalie, let's get the old crystal ball out. I know how cloudy yours is right now. Let's assume that Mr. Trump carries through with his tariff threats against Canada, and Canada in response levies tariffs against their goods. Where do you see things going? Certainly from an interest rate point of view to start.
Yeah, so hopefully that doesn't happen, but God forbid, should it happen, we'll definitely see that measure as inflationary. We've sort of been down this road before with regards to COVID and how that affected our economy and the market. And, if this does happen, it's possible that the Bank of Canada will have to lower interest rates, provide stimulus to affected businesses. And just like COVID, in the short term, it was great because interest rates came down, stimulus was provided, so we could continue. But then long term, that caused inflation. I'm hoping that the new administration and our government will be able to work something out so that this doesn't happen because, long term, the repercussions could be really bad.
Not trying to scare anyone, but if the tariffs come down, we're going to probably see low interest rates for a while.
Yeah, some
right?
stimulus.
Which could probably cause our dollar to drop, which ultimately would then mean everything is a little bit more expensive. And as you pointed out, would become inflationary. And then up comes the interest rates.
I mean, we kind of saw how the market reacted when our prime minister made the announcement on Saturday evening, indicating that this was happening. We saw our dollar go down its lowest it's ever been since 2003. We saw the stock market on Monday start to dip. So, and then of course we had the automotive industry indicate that they would possibly have to shut down within a week. So, the stock market doesn't like uncertainty. Our dollar definitely wouldn't like this. And, it's safe to say that we have a little, snippet of what could happen if this really went through.
So Natalie, our audience decides that they're going to take your advice, right? This is a time to get a mortgage before things go crazy. If they're coming to you, what should they be thinking about? What should they have ready when they come to see you?
If you're purchasing and you're a first-time home buyer, the first thing we want to do is get you pre-approved. In that pre-approval, I'll look at your down payment, I'll look at your income verification, and we'll make sure that you're ready so that when you find the right home, you can put in an offer and get you into your dream home. If you're looking for a refinance or for a switch or anything else, I will look at all of your documents and see what is the best solution for you.
The clients that you're typically talking about seems to have, good jobs and provable income. What are the mortgage default insurers doing for people who are self-employed in the trades? How are they helping them get into their dream home?
So we have insurers that have partnered with a lot of our lenders that will help clients who are self-employed. And this is great because if they're looking to purchase a home, they only have to put down a minimum of 10%. And a lot of times, self-employed clients they don't have traditional income in the sense that, they're not declaring everything. So as an example, I've helped a client who was a plumber and he was obviously self-employed and he was incorporated and he had a minimum of 2 years of, industry experience. We were able to use what's called a stated income program where, even though his his gross income was like $140,000, we were able to use $50,000. So this will really help, those clients who are, for example, in the trades or who are IT consultants who, again, have 2 years in the industry and are either incorporated or sole proprietor. And again, this is another tool to help these clients get into the market.
Sounds like the folks in the self-employed industry, so to speak, now have a champion behind them. Even though they may disclose a lesser income on their formal tax documents,
yes,
we can use a higher income, which is a little bit more in line with what they really make out in the business world.
Exactly.
Natalie, thank you for being on the Mortgage Den. And folks, until next time, this is Nick Da Silva from the Mortgage Den.